In today's episode, we're diving deep into the world of volume profile and its role in identifying high probability setups. Join me and special guest Pharm as we explore the power of leveraging volume profile to spot high probability setups. Discover the intricacies of analyzing multiple timeframes, pinpointing essential supply and demand zones, and utilizing volume profile to identify significant reversal or breakout points. Pharm will break down his exact approach to the markets and even share his criteria for a day trade versus a swing trade. You will get a clear understanding of volume profile and how to use it to your advantage in these unpredictable markets. What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. Today's podcast is sponsored by TradeStation. Serious futures traders, level up your skills with TradeStation's powerful platform. Enjoy flexibility, superior trading power, and save big with 50% off brokerage fees for life. Open a new futures account today at tradestation.com/Anthony and get 10% intraday margin rates on 3 popular futures markets. Discover why TradeStation is my go-to platform for trading options on futures. Explore their robust platform now at tradestation.com/Anthony. Pharm, what's up, my friend? Welcome to the show.
Deli, appreciate you having me, man.
It's great to have you on the show today. You know, I've been following you on Twitter for a while. Love your work. I want to get right into it today. I think we start off with just a little bit of background of what your style of trading is, because we're going to really dig into it today.
Yeah, absolutely. You know, I think foundationally, I'm a price action supply and demand trader. And, you know, over the years, I've sort of sprinkled in, you know, some aspects of volume profile, market profile, some different things. And what I like to do is, you know, use all of those combined to identify unique setups that give me a good read on what price is telling me, and that are going to be, you know, really high reward to low risk trades. And so that's really what I'm looking to do, is try to catch people off sides and, you know, take the other side of that. I do a lot of reversal trades, and that's kind of my jam. You know, I mix those together and get it done.
It's funny you say talking about getting people off sides, because, you know, where I come from, my background was in the pit. And I remember when people would talk about you want to catch when somebody's wrong, not necessarily another pit trader, but you want to catch one, like a broker's just got to do something, because that's when you're going to get that fiercest move. That's when all of a sudden they're like, I don't care where they at, buy them, right? I don't care where they're at, sold. And you get that sharp move. We see a lot of that in the market today. I'm one of those who's scrambling to get out sometimes myself when I don't like something. So I guess I'm just curious as to why or how you came up with that mindset of style.
I like things easy, right? I like things easy. And so when I'm taking a trade, I'm looking to go back through clean price action, right? I don't want to drive in traffic. I want to be on the freeway driving 80. You know, I want a nice clean setup. So I want clean price action to my left. And then, just ultimately, it's just a lot easier sometimes to roll with it. I'm not pressing things. I'm not looking for reversal trades. Other than, you know, ahead of time, looking where an area might present that opportunity, but never forcing a trade, waiting for, you know, a seller, for example, to show himself in the tape when we're currently buy side. And then, you know, the reverse would be true as well. And then just running with that guy when I know that, you know, if he takes the ball, you know, the rest of the crew is going to be offsides here. So
interesting. I know we're going to talk a little bit more about the market action that we're seeing these days, but I want to first start off with the basics of volume profile. In the simplest terms, what information does a trader get from volume profile, and why do you feel that's beneficial to you and other traders?
Yeah, I feel like this is important for a few reasons. I mean, the first thing is, you know, I should say that I look at volume profile on multiple different time frames. So everything I do is multiple time frame analysis. And what volume profile is doing is it's giving you an opportunity to identify the establishment and the migration of value over time. And the importance of that is that price leads value, right? So price can sort of do a little F around and find out. But ultimately, it's value that really tells you, in the movement of value, migration of it, that tells you what's going on with the auction. I'll tell a lot of people, like, you have to know what play you're watching and then what act you're in, a lot of times. And I feel like that's the benefit that I get from looking at multiple time frames on the volume profile, because as you know, you could have 3-4 bullish days in a row and still be in a huge downtrend, or even a couple of weeks in a row and you're actually still in a very bearish downtrend, or, you know, the reverse is true, of course. And to me, you know, watching how value develops over time on different time frames really helps me to understand what's going on in the broader auction of things.
Explain value a little bit more.
Yeah, so value is really, you know, price can move again, like I said, it can run up, but if there's not agreement that value is found at those prices, then buying is going to shut off and price is going to reverse back down. And so you're looking at, you know, interest on both sides of the tape. If you're at an auction, you know, you can have a 1,000 things for sale, you know, for whatever price you want, but if nobody's interested in paying that price, that's not valuable. And your auctioneer's not going to make his commissions, right? And so, you know, that's what's important here, is that, you know, sellers don't want to sell too low, buyers don't want to buy too high. And, you know, there's got to be, you know, some place in the middle for them to meet. And so that's really where value comes in. And you see that in volume at price when you look at volume versus price, as opposed to looking at volume versus time.
Yeah, that was a great explanation. I want to move on and talk a little bit about your approach to using volume profile and finding areas of interest. And I want to talk about also how maybe your strategy differentiates you from other profile traders.
Sure. I think the first way that I'm differentiated is not being a purist. You know, you have some, you know, purist market profile traders where that's really what they're focused on. You have some, you know, pure volume profile traders, and that's what they're focused on. You have some pure price action traders, and that's what they're focused on. And I really try to look at all of those things and sort of put those things together. You know, when we get into a few examples, we can talk a little bit more about that in depth. But, you know, I'm looking at the alignment, and I'll just give you an example. You know, let's say you're looking at a prior day's high, you know, just the price action example. And generally, you know, many price action traders are going to be bullish above a prior day's high. Well, maybe sitting right above the prior day's high is a weekly low volume node where there wasn't really a whole lot of interest. Price moved aggressively down through that low volume node to the downside in the previous week. And so a price action trader is not necessarily paying much attention to that. They see, okay, we're trading over the prior day's high, I'm going to get long. And then sure enough, you end up with a look above and fail of the prior day's high. And that's where I step in as a reversal trader and just stomp on it. You know, now they're off sides, they stop out, and we run back down through the day's range. So I feel like it's really important to be aware of all of those different concepts, because if you're just focused on one area, you might be missing the bigger picture that's going on.
No, I love that. Let's take a look at the charts now. I'm going to be very curious to see what some of your examples look like. Now, I know that a lot of you are going to be listening to this on audio. You always can go to anthonycrudele.com or check us out on the YouTube channel, because we're going to be taking a look at Pharms Charts. Pharm, we've got your charts up. Walk us through it.
Yeah, you know what, and I'll tell you what, I actually did a video for my Substack members on exactly this, and that's what made me think to share this today. I'm happy to share that with the show for the people that are just listening. They don't have the screen. I can make that link available if you want. So,
I love that.
So this
Thank
is
you.
Yeah, no, absolutely. It was a good example of how supply and demand and price action all play a clean role together, and it was just a good representation of what I do. And I get a lot of questions about you know, my 5-minute reoffer setup, you know, that I post a lot on Twitter. It's named that way because I watch the 5, and I'm wildly uncreative. So that's all I came up with. The flip side, you know, being a 5-minute rebid. But so here we have the 2-hour on ES. And first thing I always like to tell people is, like, if you're looking at Thinkorswim, or, you know, maybe your broker has a different 2-hour candle, if your chart looks different, that's fine. This is also just cash hours only. So you see these huge gaps that aren't there probably in your chart. Just make you aware. This is September 21st here, where we're going to get our background. That leads us into the trade and the trade execution on the 22nd. So you can see on the 21st, we had this big sell side 2-hour candle. Pretty nasty day, after an RTH gap down, regular trading hours, cash hours gap down. From there, we get this consolidation candle to the upside during your traditionally low volume kind of lunch hours. So this green body candle is 11:30 a.m. Eastern to 1:30, right after the initial move. And a lot of times, just a little pearl, something that I make note of is, if the predominant activity for the day is sell side, and then you get sort of lunch hours, you get some relief. I just try to be really careful chasing that long. Just a little pearl for me. And so what happens is, sure enough, the volume comes back in and they just completely nuke this. And this, if you're a price action trader, this is like the most perfect classical 3-bar down you'll ever see, right? Sell side to the downside, consolidation the other way, retraces roughly half of this initial candle's range, and then the nuke. And what this creates is supply. And this is the way that I see supply. Some people see supply, they might draw a range here and say, oh, up here is supply, and down here we bounce, it's demand. I'm looking, when I say supply or demand, you can flip it. I'm looking for a specific price or a specific range of prices where I have the known presence of trapped buyers or potentially trapped buyers. Is it possible they puked this candle? Absolutely. But there's traders on all kinds of different time frames, right? Some of them are day traders and they puked it, and some of them were buying intending to hold for a little longer, right? And maybe they've changed their mind the next day. So maybe they're still there. I also have the known presence of a strong seller or sellers interested in selling at these ranges. And this is just how I see supply and demand. So I have both of those two things occurring at the same time. Trapped buyers who are natural sellers if we return to this price. And I have the known presence of selling interest at this area as well. So I do have the volume profile on for this day, which when I drill into the 5 in a second, you'll see a couple of other things that I'll mention. So here's the 5. So here's that first day. Again, we're actually going to talk about a trade setup the next day. But on this first day, you can see that, first early, let's see if I can pull this forward. Actually, I'm not going to mess with it. Early, we had this buy side impulse that took place right at about 98 3/4 here. This buyer or buyers, somewhat defended. Most of the day they defended their position, which I felt was initiated, right around this 98.75. And then ultimately we got the late day sell off, closing well below value for the day. So, for people that aren't familiar with volume profile, that's what this is. I use a fixed range volume profile in TradingView. I just like it that way. I want it as granular as possible. I do 1 tick per row if I can. Some instruments you can't. I've extended out the value area high and value area low of the day for these purposes on TradingView, so you can see it. You can see we got a nice low volume node. If you're not familiar with that, you can see, sort of larger amounts of volume here, a thin area here where it drops in, and then, a little bit more volume here. So this is going to be an area of interest for me before I even get to the end of the day and mark out that 2-hour supply, because I've got this low volume area, which tends to be a decision point for the market. And I have this buyer that I had identified the day before. And I felt that he's initiating here, defend. The only question is he still in or did he puke here? So the actual trade then, occurs on the 22nd. So we open on a gap down. And again, I don't have extended hours on this. So if it looks a little bit different, that's fine. We spend the whole night pretty much below the prior day's area of value. So to me, objectively, I'm not too bullish if we're trading most of the volume and time below the prior day's value area low. But sure enough, we get an opening range that ultimately gets broken, 30-minute opening range. Sorry, because I know opening range traders play on all kinds of different time frames. But this day starts to look really 30-second, 30-minute. A lot of people use the 60-minute, which is the initial balance. So people are all over the place. But this day starts to look real bullish. We grind up these strong bullish candles here, right? So we're getting into the prior day's value. And this is where a volume profile trader could get in trouble. And so this is a good example of where I use supply and demand to potentially get them in a little bit of trouble, because one of the plays that a volume profile trader will use is a value area traverse. once you trade below the prior day's value area low and then sort of find some acceptance back within it, some would suggest an 80% chance you're going to trade all the way back up to value area high from the prior session. I'm not really a data and percentages guy, so I don't know how much of that is true. So I'm not thinking that here. I'm thinking we spent a lot of time below value. This day sure looks bullish here, especially here's a 3-bar up on the upside. If I zoom in just a little bit, I mean, this looks crazy strong. And but I know that I have supply sitting above. And so if I can get some kind of reaction, I'm not front running anything, but I've identified the low volume node. I've identified this prior buyer specifically. And I know this range, which is only 10 points, so if you're trading on a 2-hour time frame, it might be a 2-3 day swing. 10 points is nothing. I'm not looking to scalp with a 10-point risk. But if I see, an entry, I'm going to take it. So that brings us into, what I call my 5-minute reoffer setup. While you got this just absolutely beautiful 3-bar up, right, pretty much to the tick. It might have been to the tick, where this guy initiated. And then this seller just comes in and just completely stuffs it. And given the strength of this move up, this sell side is even more impressive to me. So what I then do intraday is I mark the open of this bullish candle and the open of this sell side candle. And again, you can flip that in a bullish sequence, and that would be my 5-minute rebid setup. And so what I'm looking to happen, this guy has taken out not one, but 2 entire candles of price action and closed below. I don't just want like some little wick and then we rip right back up. I want to see this guy seal the deal and gain some coverage here. Now he's got a little bit of room on his position, and I know I'm characterizing this as one guy. It might be, it might not be. There are some big players in ES, right? Some real big players, and you start to get to know them. But what you see happens is price returns, because again, previously the day's been bullish, so everybody's excited. We're going to go to 5,000 today. And price returns right to, what's the high of that candle? Let's see, 43.95.75. What's the open of this green candle? 43.95.75 to the tick. So I can tell you, I probably realistically got filled to the tick, because I'm always looking to enter exactly there. I will say that over the last 4 to 6 months that I've been talking about this, people front run this by a tick or two. But ideally, what you would want to be doing is looking for confirmation through order flow. I actually trade a lot, like from work on my phone, which most of my followers know. And so if so, maybe I set my order, but and I'd have initial stop here, 3.5 points. But if not, it's ideal to be looking at order flow or price action. You can look at this on the 5. You see the perfect tag. He steps in, lower high on the next candle, and boom, you're in. Maybe you drill down to the 1 and you get a little bit tighter entry. But this to me, is a perfect example where I know that, okay, buyers might have gotten a little bit out of line. They ran into some big boy who's probably the trap guy from the day before, or maybe the guy that did the trapping, and you get a nice move. And a lot of times these will end up, coming all the way back through this range, and maybe you can get 20 points out of it, 30 points out of it, and you're risking 3. So that's an explanation of my 5-minute reoffer. 5-minute rebid is the exact opposite, and an example of how I combine volume profile with supply and demand and with specific price action all at the same time.
I love how you tell what you're doing like a story, because you've painted a picture here. And I think that's such a huge part of trading, is not just in the technical analysis, but it's in the imagination of how the whole thing started and unfolded, and what could potentially happen. Because I think we get so fixated on being so technical that we do take some of the artistry out of it. But you don't do that. You actually bring the artistry in there, saying you're not, like you said, you're not a purist. I'm just using your words, right?
Yeah.
And you're looking at where you can find edge, and you execute off of it, even though it is an artistic approach in some ways, I would say, because you're not doing it by the book. You're not doing something, so systematic, but your execution in a lot of ways, or maybe not in a lot of ways, just almost is systematic.
It is. Yeah. The execution is. Yeah. I think that's perfectly fair. And I appreciate that. It's, when I'm viewing the market and when I'm interpreting what the market is trying to tell me, yeah, I think it's very much against the grain. I break a lot of rules. You'll have, especially market profile rules. I see things a bit differently. I mentioned I sort of use concepts of market profile, but like, don't ask me to teach you market profile. I'm not your guy, because I just break all the rules. But yeah, no, I think that's exactly right. But then the execution is just pure price action. I mean, you could trade the strat execution off of, my interpretations of what price is telling me, because it's still just a simple reversal on a short time frame execution. It's exactly right.
Yeah. A couple of questions about things you mentioned. First off, why regular trading hours and not using extended trading hours?
That's a good question. I get a lot, actually. So I use both. So maybe I go a little bit overkill. This chart just happened to be there. It was a little bit cleaner. I keep, you can probably see the top of my screen, how many windows. Those are all for ES. So like, I don't have a whole lot of time. So I have like my templates lined up, most of them. And so I will do volume profile specifically. I will look at regular trading hours. What does a profile look like? I will look at overnight separate from that. What does that volume profile look like? And usually after cash has closed, I'll just delete, the prior overnight session. I don't care that much anymore. So I'm mostly focused on cash hours, but into the day, I'm very, very much looking at what overnight is telling me, and I'm looking at that profile. And then I would say most of the time I do keep extended trading hours on my chart. Sometimes when you're looking at specifically a potential swing low, and this could be a good example. Maybe I can, without blowing up my entire chart, maybe I can switch to the daily and give you a good example of the swing low. So we had that recent swing low at the beginning of October, right? And you heard a lot of traders talking about how it was not a valid swing low. And I was one of those. Again, I'm not a purist, so I ended up swinging long anyways, from 42.70s, but it wasn't a good low. And so if you're just looking at all hours, when I switch to the daily, this gives you extended on TradingView. So you see this does look like a nice low. It took out the low of the prior day. We got a nice wick and we kind of ran from there. Everything looks good, but if you look in on the this will only give us RTH. If you're sort of a market profile trader or, a number of different types of trading, you're looking at these like to the tick equal lows. And it's just like, I mean, come on, is it going to be that easy? I really don't like double bottoms on indices, especially ES. I really don't. Yeah, I'm not a purist, but that really bothers me. That to me just looked like stops are just begging to get run. Just begging to get run. I just see stops there is all that I see. And so that's an example of where like I'll use both, because if you were just looking at all hours, you'd look at that low on ES and say, oh, that's fine. So, if you want to do cash hours only, a little trick, but you don't want to have like two different chart template setups or whatever, just use SPX and it's going to be close. Though, again, the bottom kind of looked a little better on SPX than it did on cash hours ES. But so yeah, I actually use both. Maybe it's a little overkill, but I'm looking for information on both extended trading hours and cash. And then I guess the other question would be like back adjusted charts or not back adjusted charts on ES, right?
I know.
We could talk for an hour.
It's
on
also
that.
controversial too.
Yeah, absolutely. So we probably disagree on it, and that's fine. I look at both actually for certain things. I mostly do not back adjust. But then once in a while, I absolutely understand that there's some things you might want on a back adjusted chart. So yeah, I just do whatever, like whatever speaks to me. That's where I go.
I think that's really not talked about enough. I mean, people make it seem like you have to be a certain way, and success doesn't really come that way. All of the traders I know are a little bit unique and different and quirky, and there's something different about them. They're all a little off in some ways. It's just like, you're like, why do you do that? And you're like, I kind of don't know why, man. I just do it, and that's okay, because brings us back to your execution. You believe in what you did. And to me, that's the key. That's why you are systematic in your execution and you're not jumping all over the place. And that's why you can also go and execute from your phone, because you know what you're looking for. You
Yeah.
know what you want. And that's the key. To me, that is what really the difference is in a lot of ways between traders that really never find a leg up, never find a way to actually start making money versus those that do. It's really just the confidence in the execution saying, I'm doing this and I'm sticking by it.
No, I think it's exactly right. The traders that are out there looking for the answer, I just need to learn that one more thing, that one technical indicator that guy has and I don't. If you're out there and that's what you're thinking to yourself, then you're frankly not going to make it. Very, very likely not going to make it. If you're looking for that one next thing, to me, it's about really understanding, all of the aspects of the market, having a feel for what's going on. No one indicator is the answer. That never always works. There's always something that blows it up. So, do your best to understand what works for you and go with those trades. You don't have to take everybody else's trades. I miss a ton of trades and I don't care at all. I choose not to take them. I'm just looking for specific setups. I don't even take a trade if I don't think I can get 30 points out of it. That's just personally what I do. I don't always get 30, but like I want to know that I could get 30 if this happens. And so maybe I can get some off at 6, and get my stops to even and, get the rest of my position to 20 or 30 or something. That's just the way I trade. So you don't have to trade like me. You don't have to trade like you. It doesn't have to be a certain style, learn what speaks to you and go with that.
Let's talk about swing trading versus day trading. You're talking about getting 30 points. Are you only looking for trades to get that 30 points with the potential in that day? Or are you holding them overnight? Or how do you differentiate between a swing trade versus a day trade?
Yeah. So that's a really good question. So I do both. Lately, it's been a lot of day trading just because we have had a lot of the wild swings. And then you don't know what's coming out overnight. But if I have a great setup, I will swing it. And so, the example would have been in early October. Things were pretty bearish. For the most part, we were bearish. But, there was certainly you didn't want to be short on the way up here, intraday, that's for sure. So there were some long trades. But to me, if I'm trading against higher time frame participants, which I've identified, as monthly participants appear to be selling and weekly participants appear to be selling, I'm not holding a swing long for the most part overnight, right? I'm mostly looking for day trades. Most of those trades are going to be day trade short, but not all of them. But then when I see a potential setup for a swing long, I will take that. And probably the number one rule that I'll use, and again, these October lows really were the key, is one of the things I need to see is value migrating higher from day to day if I'm going to take a long, given a higher time frame bearish context. So if we're in a downtrend, I'm never going to swing a long unless the buyers have proven something to me. And so, what that would mean, is back in, our previous example we talked about, we had the prior days value area high and value area low. I want to see today, were we able to bid above yesterday's entire value area? Because now if we're trading the rest of today or the entire day today above yesterday's value area high, then the buyers are telling me that they disagree with those low prices. And so that's, to me, is the simplest sign for like, maybe we're reversing here. And so I won't ever just like buy the dip and then hope it's the bottom, and then buy the dip and then hope it's the bottom. And so, now we're trading, into this new week, into some new lows, and we have to figure out, are we just buying this, or are we going to give buyers a chance to firm up a little bit? And so I am looking for swing longs this week, while probably day trading short. And then, waiting for buyers to prove something. So I do a little bit of both, but I need to see some kind of early shift at minimum and see those buyers prove something to me.
Let's talk about some potential scenarios you're looking at for the rest of the year. We've got the charts up. Mm-hmm. Maybe you go over on how you think the rest of this year maybe plays out.
Yeah, so I think there's a couple of scenarios here, and a lot of people have been looking for this. Everybody's looking for 4,800, by end of the year. A few weeks ago. I wonder what they're thinking now, I suppose. But, you know, there's two scenarios. You've got, you know, people talking about a potential, this is crappy trend line. Sorry about that. They're just on there. I don't even remember drawing that. But you've got people talking about a weekly cup and handle. And we're going to new all-time highs soon enough. And then you've got, you know, some people that think we're going to 3,800. And honestly, like 3,800 to 4,600, nothing in that range would surprise me at all. It wouldn't surprise me. What I think is most likely is that we have sort of probed lower after sort of, you know, some of the hangover from AI mania. I mean, that's really what lit this big breakout move. That and my vacation. When I go on vacation, the market goes bonkers. My followers will tell you that's crazy. We had that July move. And so, you know, we're in some of that hangover phase. We got the treasury issuance. We really had to reprice everything. And now we're just trying to find out where we're going to balance. And to me, most likely is something like 4140s ES to 4400, like maybe 4494. And like, to me, all of that is going to depend on whether any technical damage is done like this week. Like, I really think this week is going to determine whether it's something like a 3,800 to 4,200 balance or into the end of the year, like seriously, or more likely if it's going to be, you know, something like the 4140s or here at 4,200-ish into 4,400, maybe 4,494. I'd be a little bit surprised if we get over 4,494 to 7 into the end of the year as we sit here, you know, later October. So I think most likely, you know, we're finding this new balance and we'll probably chop around here 41, high 4100s to, you know, mid 4300s would be like our primary range with slight excursions outside. But if we lose, we'll say if we lose 4170s convincingly this week, it could get a little bit gross. 4070 can come in a flash if we lose that 4135 to 40 area. So it's yeah, I don't know. And I try not to guess. You know, people like to make big calls and that's how they get, you know, 100,000 followers.
That's how you get popular, buddy.
Yeah, it really is. You know what? And honestly, that's like, it's probably why my following is just sort of grind along. We talk about ES, we do some individual names. But yeah, you know, I'm not posting enough bear porn, I guess. I think I could be 100K like in a flash, Deli, if I just posted some good bear porn. So no, I think most likely is, you know, mid 4100s, mid 4300s into the end of the year is most likely. But we do have the opportunity to both trade significantly lower. I just don't see a whole lot higher than 4490s.
Yeah, I like how you talk about the markets and ranges. And if we go there, we'll wait to see what happens there. If we go there, we'll wait to see what happens there. And that's why you and I are very similar in that, like, we don't make any big claims. I'm only out here to put forth a plan. And if we get there, then I'll know what I'm going to do. I mean, I might have a great area I want to be long in, but if the action is terrible when it gets there, I may not buy it, you know? Yeah. So there's just so much that could happen. And look at what could happen geopolitically as well. What could happen in commodities and the dollar and interest rates and how that can have an impact on U.S. equities. There's so many things, but, you know, as technicals go, it's good to hear you talk about ranges, and I appreciate you sharing that insight with us. You know, to close out today, I want to talk to you about a couple of things. I think, you know, just trying to get to know you better, and I think that I think for the audience to get to know you a little bit better as well. What was an influence behind you as a trader? Was it another trader? Was it just finding it on social media? Was it a family member? What is a book? What triggered you to get into this business, and what has been influential to you?
Yeah, well, I mean, honestly, we could spend an hour on that. It's a pretty funny story, to be honest. But I was 8, and I did filing for my mom's small business, and came across, you know, this piece of mail that I had to file that's had her name, FBO Pharm DKS. I was like, who's Pharm DKS? It turns out it's me, you know, 30 years later, whatever. You know, I open it up and it's like this money or whatever. And I'm like, what is this? And, you know, she explained that it's, you know, a little mutual fund or whatever. And I was like, okay, that's cool. And I followed it over a few months and I'm like, this isn't doing anything. I'm not going to get rich off this. You know, what is this? And she's like, oh, you know, you can buy stocks or whatever. And so I started just like reading some books, you know, about that. I was 8 years old. This was like 1990. You know, ended up buying a couple individual stocks and, just at that time, just dollar cost averaging into it. And then, the rest was kind of history. I didn't pay close attention once I learned about girls. I focused on getting really good at that, for a while. But at one point, I had a side hustle at 12, 13. I had like really good money in a brokerage account and some stocks, like good timing, like right into 1999. Like I thought I was the best investor in the world. And then I happened to sell some like in 2000 to go to college and like buy a car. And so like I used like half my account. And then I just remember coming back after first semester. I never even looked at it. Right during college first semester, I came back and I was like, "What the hell happened?" Like it just got cut in half again. So like, yeah, I've always been aware. I didn't really start actively, doing anything more than investing until after 2009. Frankly, when things got easy, because like I wasn't, some amazing trader or anything back in 99, 2000. I wasn't some amazing trader in the GFC. I just like kind of held on a little bit to some things. I luckily, happened to be allocated, pretty reasonably just by luck. And didn't really start swing trading and taking a little bit more control over some of my investments until, 2009. Cause it was just, let's be honest, it was straight up for almost 13 years, really.
Yeah.
So.
Well, thank you for sharing that. I want to leave on this final question today. The markets have been whippy. The environment has not been the easiest, I think, especially for a lot of newer traders. I've got my camo on today. I feel like I'm coming to a battle every day. It has been tough. I know that I've been stopped out of a lot of stuff intraday, quite often. And really, I've talked about this on Twitter. It just doesn't matter how small you get. The market seems to be finding your threshold and getting you out. Yeah. Talk to everybody, maybe give everybody a little bit of advice or just your thoughts on how you're handling this really whippy and volatile market environment.
Yeah, you mentioned the first thing is your size. Especially now, this last week as volatility is getting even higher. You just remember a few months ago, we were having like 22-point range days. You know what I mean? Like you could just like size whatever and like you're not going to get hurt that bad, right? Well, that's not the same anymore. So that's the first thing is adjust your sizing, relative to the daily ranges that you're getting and volatility. If you just want to have a rule, just like maybe size down over a VIX of 20 if you're a newer trader and really size down, over a VIX of 25 or whatever. That's the first thing. But the second is like, don't overtrade. Like so many people just have to be in a trade. And so again, if you're looking for those specific setups where it's just grade A, and you know what, like maybe I'm lucky that like sometimes I'm busy with work and, managing, some other investment accounts or whatever. I can't do that. I can't overtrade. And so maybe that was a good thing for me because like I'll take one trade a day or two or zero sometimes. And so to me, if you just focus on those high probability setups, that have a high reward to risk, like that's the other thing to me. And stop trying to mess around in the middle and always being in a trade because, you're just going to get whipped. You're just going to get whipped.
Yeah, you nailed it. The overtrading is absolutely the killer. It's what gets myself and most of us out there into trouble. You feel like you have to do something because the market's moving, or you try to make a couple ticks and you lose a couple.
Yeah. Yeah. Whoops. Yeah, for sure. Yeah.
That didn't work out the way I thought it would. Yeah. Pharm, this was great. It was such a pleasure to meet you. I got to tell you, I'm really a big fan of your work. You are underfollowed. I would tell everybody to go out there and follow you. I know you've got your Substack. Tell everybody where they can follow you on Twitter and talk to us a little bit about your Substack and why people should go and check that out.
Yeah, no, I appreciate that opportunity. So Twitter handle is @PharmD. It's PHARMD and then _KS. So that's my Twitter handle. You can go to PharmDKS, no underscore. .com. That'll link directly to the Substack since Elon on Twitter likes to suppress it. I launched the Substack because, I've been sharing a lot, with no, kind of business model or anything for, a couple of years. And a lot of people have been asking for more because, they like what they see. And, I'm married. I got 4 kids. I've got a job, I'm trading to pay so my wife can be retired. So like, and then I'm managing accounts for mom and pop and, doing the stuff. So I'm a busy guy. And I was like, well, to me, like my kids and my wife are the most important thing. And like, I'm not just going to, spend that much more time doing something for free. So I started it off at like, frankly, an absurdly low price point. you know, just to do something and provide extra. And like, to be honest, my trading's been way better because, you know, it used to be I'd wake up, you know, 15, you know, minutes early and look at the markets and, you know, then post some pretty good stuff, frankly, on Twitter, you know, some pretty good reads. But I didn't, you know, need to trade, and, you know, so I didn't prepare as much. And, you know, now that I've got other people that I'm teaching and, you know, outlining specific trade setups, you know, the night before, I'll outline 2 or 3 very specific and actionable trade setups, not just like these are the levels, play level to level. It's like, if this happens, this is what I would do, and this is what I would expect. And very, very specific. And then I come in the morning and update via a live chat, you know, which we actually launched in a Discord today, like just for chat. So I'll come in and say, this is what's happening. This setup is presenting. You know, I'm going to go ahead and take this. And honestly, my trading has gotten a lot better because now I'm spending a lot more time, you know, doing that as well. So it's been good for everybody, I think. We've been sort of expanding, you know, the content over time as people have, frankly, been very interested. And so I appreciate that, you know, very much, everybody who's been out there. And, you know, I'm just looking forward to making a difference and teaching. I love to teach. I'm probably a better teacher than I am a trader. And frankly, I'm a pretty good trader. So, you know, I really look forward to building this out and helping a lot of people learn, you know, what I do. And if they like it, that's great. And if they don't, that's fine too.
That's awesome, Pharm. I'm happy for you. You deserve it. Everybody go out there and follow PharmD_KS. Check out his Substack. Guy puts the time in. I mean, Pharm, I'm a fan of yours. I think you're one of the good guys out there. It was really such, like I said, such a pleasure to get a chance to speak with you. And I thank you so much for coming on the podcast today. Thank you so much for coming on Futures Radio.
Appreciate it, Deli. Had a great time.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a 5-star review on iTunes. Never miss an episode. Go to anthonycrudele.com and get on our email list for show notifications and for free content that is exclusively for subscribers. Also on anthonycrudele.com, you will find tons of videos and education on trading futures, options, and crypto. Past performance is not indicative of future results. Opinions expressed are solely my own and my guests, and they do not express the views or opinions of my sponsors. Futures Radio Show is produced by Crudele Productions.